Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 20th day of May 2015, and this is the daily report for gold and silver. After witnessing a dramatic decline over the last few trading days, taking the market almost to $1,200, we do have the market recouping just a little bit, up about $2.90, $3 on the day, $12.0960. We've seen a low of $12.0270 and a high of $12.13. Forex pretty much the same in terms of spot gold, and it has had a low of $12.0348 with a high of $12.13. Finally, to silver. Silver is currently trading up about 3 cents on the day, $17.10, low $16.93, and the high $17.28 on the day. So traders, as we take a look at the market this morning, specifically gold prices, what we can see is we are up a couple of dollars. We do have, though, the dollar actually being stronger, again, the U.S. dollar, that is, and that is actually dampening any kind of a gain. The gain that we would see without factoring in the dollars, about $5 rather than $3. So you've got $2-3 of dollar strength really contributing to dampen this move up. When we look at this market, and I want to look at it in a couple of ways, but when we look at this market, the first thing that we're going to notice is that as we look at these series of lows, first at 1140, this secondary one, of course this market's been trading sideways. I'm not taking that out of the equation. But we've had the low, higher low, and then as of right now, a higher low again. We'll have to see if that holds. In terms of highs, we've seen this high and we've seen a series of flat highs. That's been our resistance. Lower high here, and then a higher high here. So we don't really get any straight information in terms of being able to decipher any kind of absolute trend. If anything, we have really an absence of trend in the market. And so when we have a scenario like this, we really need to look at the smaller minutia, so to speak, of the market to get any sense of what we're going to see in the very near future. So when we look at our small count, and of course realize we're looking at a half-a-day chart, or half-a-day candlesticks, I should say. So when we do that, we're really looking at a very, very small fragment of the market. But when we do this, and we looked at this the other day, we've had this series, as the market's been trading sideways, of course, in which we've had really a ridiculous market because we've had this A, B, C, A, B, C, and then it appears as though we went into some sort of a count to a 1, 2. We're currently in a wave 3. When we break up this wave 3, or we're currently completed a wave 3, 1, 2, 3, 4, and then 5. And then with the 3, we should have a decline to a wave 4. Wave 4, this is where our get, or the Elliott wave, is saying that should terminate roughly in this area. So if that's the case, we've now then seen our wave 4, and we would then go into some sort of a wave 5. There's another count that we looked at yesterday which shows that we hit our 5 here, and we should be going into some sort of an ABC. So we want to really see where this market wants to actually gravitate towards, and really because of the fact that the dollar has been so strong now after really ending that longer period of a correction after being tremendously strong, we've really got to factor in the dollar into any equation at this point. So when we look at our shorter term studies, this is a 120-minute, and I draw your attention to a couple of Western indicators that we've been following lately, which is our stochastics. The market is genuinely oversold on a very, very short-term basis. Realize that this is a 2-hour chart that we're looking at here. And also MACD is in the oversold area and is signaling a move back up. And then, of course, this is that count that we were looking at, only it's been elongated because we're using candle lengths that are much shorter. So traders, you'll notice that the count really changes when we go in and look at our daily chart. And that's what I've got up here. And according to our Elliott wave count on a daily count, if we take a look at, we had our ABC up here. This was at 1300 plus. Then we had a 1, 2, 3. this looks like we concluded wave 4, and if this count is going to hold up, we're going to go into a final fifth wave, and that fifth wave actually would take us to prices below 1140. And that, of course, would be our longer term view. So as we said, a dollar again is a little bit stronger. Crude oil, which fell really hard the other day, this is a daily chart, and you can see the market falling to, call it roughly $57 per barrel. It's back up right now at just below $60 per barrel. Very light activity, but that market is trading higher on the day. So traders, of course, just as gold is paired with the US dollar when we look at it, the euro dollar has a lot of input and effect on the dollar, of course, because of the weight in terms of the dollar basket itself on the dollar index. We were looking for the market to hit somewhere around 114, 115 up here. We certainly have hit that, and the question is, according to this particular wave count, you've got the long wave count 3. Does this complete wave 4? Because if we see the dollar begin to move back up, vice versa, we're going to see the euro dollar moving back down and continue under pressure. And that appears to be something that genuinely could be in the works in terms of a pivotal reversal. And speaking of the dollar, I could show it to you in a daily chart, but you can really see the market move that we have witnessed this week in the dollar, this surge in the dollar as it came off of these lows, roughly at 93.5, or actually really at 93.05, excuse me, up to about 95.5. So we've seen a genuine rise in this market over this week. And traders, finally to silver. If in fact we see gold, as we spoke about yesterday, going into a wave right now that should take the market back up, in other words, a upside wave, we're going to see the same in silver. The question is, will we find real support in this area, roughly at about 17? And if so, how far could the market go? Well, if in fact we do see this market begin to rise again, I would look for tops back to threaten these areas here between 1750 and the tops of this area at 1770. This has been Gary Wagner, wishing you as always good trading. We'll talk tomorrow on Thursday for another daily update and review. Bye-bye.